Hello and welcome to the Stock Trade Genius Portfolio Strategy. I'm Mark Yagi. I'm the portfolio manager here at Stock Trade Genius, and I know a lot of investors who get involved in investing in the stock market, and they have a lot of problems with it. The main problem is that they have a struggle. And what are they struggling with? Well, they're struggling about which stocks to buy and what price. Secondly, there's too many ideas out there on the street, and they're not really sticking with one that works. And once they do find a stock and then they buy it, they don't know when to sell. So they have a problem. Either they sell it too soon and they miss out on lots of gains, or they hold on too long and they either give up on their profits or they mostly incur larger losses. Sometimes this whole process of finding a stock and investing just takes way too much time, and most people just either give up or they run out of money altogether. So what do you really want? Well, if you're like most investors, you want a system that helps you find stocks. Number two, once you find it, you want specific exit plans. You want an action plan. You want a strategy. And you want to stop making trades based on emotion and have a system that works. It tells you what to buy, when to buy it, and the prices at which you can sell quickly, and so that you can minimize your losses and improve your gains. And finally, if you're like me, you don't want to spend hours and hours managing your portfolio. We all have other stuff to do, and so we want to have time to enjoy the rest of our lives instead of just sitting in front of a computer and managing our stocks. So what we need is a system that provides steady, consistent, and profitable returns. And at the same time, it has the highest probability for success. That's really what we're about here, is probability. We don't just want to guess, we want to get the probabilities in our favor. And we'd like to introduce to you a new strategy that we have that we're very proud of called the Smooth Sailing Portfolio Strategy. We think that we have a strategy here that's not only safe, but fairly reliable in making trading a much more enjoyable and profitable experience. So let's explain how that works. So here are some of the keys to any successful trading strategy. Number one, have a rules-based system. And that means that you have a set of rules, because imagine a football game without a set of rules. You'd have a bunch of people banging into each other, getting hurt, throwing the ball around with really no set of rules and how to score. So it wouldn't be very good for the players, and certainly not for any of the fans or the audience watching. Number two, reduce or eliminate emotions in trading. That's really key. You have a system that you can execute every time. When you put emotions into it, they get in the way. So you want to remove those from your trading. You want to have a plan, and you want to execute that plan, and then you want to do all of this over and over and over. So what are some of the rules that we would have on this system? First of all, we want to limit your losses. Your best loss is your first loss. We want to get out quickly. We want to admit that we're wrong and move on. And then we want to maximize our gains, which means we want to keep our losses small, but we want to target a decent set of gains such that even when we do lose money, the gains offset it and actually exceed it. And then finally, we want to trade in the direction of the market. We don't like to be those salmon trying to swim upstream or trying to pick the bottom, being smarter than the rest of the group. We want to trade with the trend. So here is the smooth sailing system in a nutshell. First of all, we only choose big cap stocks that are highly known and that are worth a huge amount of money, in the billions and billions of dollars. So those are the big ones. You know them. Safest and highest performing sectors. This means that our sectors are in the top sectors, but they're also sectors that don't move a lot, don't change a lot, so they're not as volatile. And then finally, this is a long strategy, so we're only buying stocks or options, but in this case it's just stocks, and we want to buy those stocks when the market is going green. We don't want to be buying again in a red or a yellow market. We want to buy when the market is going green. And so we get those signals that tell us when the market is going green, and we screen for these stocks that are the best ones to buy at this particular time. We'll show you what that means. So we went back and did some testing of this portfolio. We did it automated so we didn't have emotions involved, and we tested over the last 3 years to see how well does this portfolio perform against the market. Well, take a look at it. We started with $100,000, and by the end of the year, we had $158,141. That gave us an annual return of 58% versus the market, which is around 10%. Now, this is all the stocks in the market. And then we had 5 winners and 1 loser, which is incredible because it's an 83% win percentage. Now, we are all about probabilities here. And when you first buy a stock, there's a 50-50 chance. There's a 50% chance you're going to be a winner and a 50% chance you're going to be a loser, right? Because there's a buyer and a seller, and one of them is always wrong. But when you keep your losses small and you allow your profits to run, that's when your real gains in a portfolio can happen. But now imagine that you're not just flipping a coin and hoping to be right 1 out of 2 times. When you flip a coin, you're probably going to be right 3 out of 4 times or even higher with an 83% winner. And then finally, your max drawdown, that 12% down at the bottom. That means the most that you've lost from a top to a trough is only 12%. And that's extremely low in a portfolio that lasts for a year. And so that allows you to sleep at night. That's what's great about this portfolio and that drawdown number. Let's take a look at 2013. Even better, started with $100,000 and ended with $201,516, which gave you an annual percentage return of 102%. And that's versus the composite indicator of all the stocks of 22%. 77% of those trades were winners. 7 of them were winners, 2 of them were losers. And again, a very low drawdown number, just under 14%. 2014, same kind of thing, but not quite as much. Pretty good though, $100,000 here, and you ended up the year with $154,000, giving you a 55% annual rate of return. The market overall did 4.35%, so this blew the market away by 10 times. And you had 6 winners, 2 losers, 75% of them were winners, and then you only had a 13% drawdown. Great. That's individual over each year. What happens when you put it all together? Well, again, the market was going up during this period of time, so we had that advantage, but we started with $100,000, and by the end of it, we ended up with $402,042.96. which gave us an average annual return of 100% a year versus 13.8% for the general market. The percentage of winners was 81%, 13 winning stocks, 3 losing stocks. Our max drawdown was 20%, which is still pretty darn good over a 3-year period, especially when you're getting this kind of return, where you're getting a 300% return on your money. So $100,000 turns into $400,000. So you can see why we're so excited about the smooth sailing portfolio strategy. And we hope you join us. It's a small subscription price. And by joining us, you'll be getting these emailed results to you as soon as we get them, as soon as the signals happen. And you'll be able to trade right along with us and do just as well as this portfolio has done over the last 3 years.